All right, guys, coming up next, we're going to be paying attention to what I watch closely to anticipate a market going up or down or anticipate a market crash. Stay tuned. All right, guys, Michael Jacobczak, and as I said, today we're going to be paying attention to what I watch on a daily basis to see if the market's going to go up or down, or if at some point there's going to be a market crash. So basically, what I'm going to pull up here, I'm going to show you a snapshot of what's happened since January this year. If you've been paying attention to the news, the big news right now is sales are down 40% since last year. There's obviously reasons for everything that happens, but we're going to be watching closely in terms of what's happened in the last couple months and moving forward, and what I watch on a regular basis to anticipate if the market's going up or down. So as we see here, you got January to July. At the top, you have sales, which started around 5,000, trended up, and then came back down to 5,000. So, or just under 6,000. So as you see, which is last month, and that's where sales are down 40%, which is the big headline in the news. Below that, we have active listings. Now, active listings are the amount of listings that are on the market at the end of the month. This is very important because watching the market going up or down relies on supply and demand. So these numbers, if you watch these numbers closely, it will dictate what's going on in terms of with the market with price, if it's going to continue to go up or down. Now, MOI is months of inventory, and that's the relationship between active listings and sales, which we'll get into a little bit more because that's the key to watching if the market's going up or down. And if you look at sales in January were around 5,000 and active listings around 5,000, months of inventory, which is the amount of inventory on the market that if no more listings came up, how long that inventory would be, to supply the active sales. So right there we have 1 month. Now 1 month, average price was 770,000. Just below that's days on market. That's another good indicator to watch how fast stuff's selling. But moving forward, as you see, months of inventory trended down to 0.65 and eventually went back up to 3.1 is where we're at right now. So if you look at that from January to now, it looks that the inventory is 3 times as much, which at some point you may say, hey, that's a big increase. Market's obviously tanking. There's a crash because that's a big indicator. Now, having said that, the media playing on the 40% drop in sales year over year, we're up in price still because if you look as the inventory dropped and sales remained pretty steady going up, what happened was the prices jumped from 770 to 916 to 920. That's a huge increase, which moving forward cannot sustain that much because at the end of the day, having inventory under 1 or around 1 month of inventory is extremely, extremely low, which is when you heard about multiple bids, no conditional offers. It's extremely, extremely low, which is great for sellers. Also for listing agents because you can just put it on the market and it sells. Now, with the months of inventory, there's different ways of actually, you might have heard it, there's buyer's market, seller's market, and there's a balanced market. Now, if you look at what these mean, a seller's market is 5 months or less. Balanced market is 5 to 7, and a buyer's market is 7 months or more. So as you look at those numbers, 3.1 where we're currently at, it's a number that, inventory does not pay enough attention to the media because it just doesn't, no one cares. They always thrive on what's the best news line, which is sales are down 40%. But what they're not covering is inventory is extremely low. It's 3.1, which is still a seller's market. You might hear some agents talk about, hey, the buyers have the edge now, which at some point we might say that, or some agents might say that because at the end of the day, it's great to have conditional offers back, not having to, outbid many, or compete with other buyers on the same property. So it takes the stress away from buying agents and also buyers. Having said that, 1 in 3 properties are going to sell when it's on a 3.1 months of inventory. What that means is out of 3 properties, your property, if you're a seller, is going to sell. And you might hear some agents complaining right now like, oh, I've been listing this, it won't sell. You got to remember, real estate's all about location. There's specific micro neighborhoods and areas in Toronto that will never be affected by, it doesn't matter, months of inventory. It's just real estate's all about location. There's a better demand for certain areas, and there might be still bidding wars going on in those areas, which is fine because it all comes down to supply and demand with inventory. Now, when we look at this, we're sitting at 3.1 months of inventory. So we're still in a seller's market. So to me, you don't need to, at some point get too carried away with the media. At some point, I think this trend, we're going to see August very similar to July, and then it's going to start going back up. There's a lot of influences on the market, whether it be interest rates, regulations, that will obviously drive the market. A lot of times, buyers and sellers sit back when there's big stuff going on to see how the market plays out, and then they get back into it. We've seen that in Vancouver. So what I want to kind of follow up here is just to give you an idea of what's going on across Canada, just to show you that Toronto, being 3.1 months of inventory, still a really good market. As you look here, Montreal, 7.9, which is a buyer's market. Nova Scotia, 7 months of inventory, which is a balanced market. Edmonton, 5.4. Calgary, 4.0. And you got to remember, those Edmonton and Calgary is driven by the oil sector. And it's obviously oil's been kind of crumbling for the last couple of years. So you look at their markets, there's still, obviously a balance in seller's market, which is great. Vancouver, 3.1. That bounced back quite a bit, which is still a seller's market there. Toronto's sitting the same, and Ottawa is very similar to Toronto. So as you see right here, this just shows you an idea of the markets across Canada, what's going on in some of these major cities. So being from Toronto, in the Toronto market, you don't need to get too carried away with what's going on in terms of sales are not there. They will bounce back. Summer in general is a very, very slow time of year. It will pick back up in September. All right, guys, this is my main indicator, what I watch closely, anticipating markets going up or down or crashing. Stay tuned for the next video, guys.